Hello, everybody. Welcome to our weekly Tuesday webinar. My name is Ben Smith. I'm the Director of Investor Relations. Happy to have you with us. It's the day after Tax Day. Oh, joy. April 16th, 2019. So I'm going to quickly kind of go over our upcoming things. In 2 days from today, we've got the Income Property Showcase for Detroit. Today is just kind of the overview of the market, and on Thursday, we'll go into more details with the actual affiliate talking about their properties. And then April 22nd to 25th, literally next week, we've got Opportunity Zone Week. We're kind of switching things up a little bit. Monday is how to set one up, and then Tuesday, Wednesday, and Thursday are the respective affiliates that we already work with and have for a long time, but they're also doing ozone stuff. And so they'll be talking Tuesday, Wednesday, and Thursday. Now, the way these things work, you can't just waltz in and attend any webinar. Some of them you can, like the Monday one, but the ones that actually talk about properties with our affiliates, you need to have had a strategy session to be able to do those. So like today is open to everybody, but the one on Thursday, you have to have had a strategy session. And the trick to all this is everyone's very, very busy, so it's hard to necessarily get in. There's very little appointments available between now and Thursday. So it's kind of a weird situation. We are trying to work it out as best we can, but in the meantime, you need to have had a strategy session, meaning have a 10 to 15-minute conversation with either myself or Joe or Aristotle. Those are the three investment counselors, in order to attend either the Thursday one on Detroit in 48 hours from now, or the three you see with the little asterisks. All right, our NIVE event coming up, Saturday the 4th in San Mateo and Sunday the 5th in Los Angeles. We're going to have a big one. You can see all those markets there: Huntsville, Montgomery, Cincinnati, Albuquerque, Houston, Dallas, and Central Florida. All of them are going to show up. We might actually have a special guest or two slotted in there. So there are a few things still remain to be seen, but what you see on the screen is an absolute for sure. So hope we can see you there. And if you're not able to come to LA or Los Angeles or San Mateo, we understand. It's okay. It's only a small part of the world, but we will have not the event archive, but each individual one of those cities you see there, they all have webinars that are archived on our site. And essentially, the webinar that is archived on the site for example, Houston, is pretty much the same as what Houston will be performing live. You know, it's like you're listening to the record album rather than seeing them in concert. It's not quite the same, but the message is pretty much the same. All right, that's me. I'm the IC, Investment Counselor and Director of our Investor Relations. Been doing this for about 28 years. Did a bunch of properties out west, and now I'm out east, and I'm not doing the fix and flip, but I'm doing the buy and hold. Really love the business. It's a fun space to hang out in for the most part. All right, there's Rich and Kathy. The whole point of this whole exercise, the whole point of Real Wealth Network is that we simplify the process. Most people that we talk to, you know, they're on their treadmill with their day job or whatever they're doing. They're having a good time or maybe not, but they're doing what they need to do, but they just don't trust. They don't really trust their income situation when they stop working. I mean, the stock market is the stock market. There's good and there's bad about it, but they want to just create an alternate income stream. And in our opinion, the best way to do that is to buy a portfolio or build a portfolio of real estate income producing rentals and pay those things off as quickly as you can. Once you acquire the number you want, whether it's 5, 10, or 15 or whatever, you start paying those things off, and the goal is to own 5, 10, or 15 fully owned, not encumbered with a mortgage, and you're just producing a nice passive income stream. So one of the things you can do on our site is just educate yourself. I mean, we've got everything you need is there. Webinars and links to Kathy's podcasts, and she's got 2 of them. You know, she's got the Real Wealth Show, which goes into in depth, and then she's got the Real Estate News for Investors. And then we've got all kinds of archived webinars like I've been talking about, and links to all kinds of things, market pages that talk about stuff. So it's all right there. Doesn't cost anything. We don't harass you with spam or anything. And when you're ready to go, you just connect with us. And I'll sound like a broken record, but you need to connect with us to really take the next step. And that might include some of the detailed webinars with our affiliates meaning the property providers. If you're not quite ready to do that, it's no big deal. Don't schedule a strategy session until you're ready. And what I mean by ready is, within the next 4 to 6 months, you'll actually buy something and invest. If you're not ready, then don't schedule a strategy session. It's okay. You just soak up the education. So once you do have a strategy session, though, we do connect you with resources. We'll connect you with whatever city you're interested in, and we will talk to you about what cities are appropriate for you, and then connect you directly with that resource. So you'll be talking with the property provider in Detroit or Jacksonville or Chicago or Houston. So let's go over the frequently asked questions, because these are the things that people ask us about the most. First of all, we don't flip stuff. We're much more of a long-term hold company. That's what we help our members do, is not buy something at super low rates and then fix it up with sweat equity and then turn around and sell it. I mean, there are those who will help you do that, but that's not what we do. We're much more of a long distance and long-term wealth building company. That's what we like to do. In terms of the finances, if you're going to buy all cash, which some people do, you're going to need about $60,000. If you're planning on using your individual retirement account to invest in a property, you need to have about $50,000. Most people, however, don't do either of those things. They buy outside of an IRA. They just, normal non-sheltered income, normal non-sheltered money you happen to have, and they finance. They put 20% down, the third bullet point down. You need at least a 20% down payment plus some closing costs. I usually add $4,000 to it. So if you see a $100,000 property in Cleveland that our Cleveland affiliate has, you want to buy it, fantastic, but you'll need to have 20% of $100,000 or $20,000 plus about $4,000 in closing costs. You also need to have a decent credit score, a couple year job history, ideally, although a lot of people don't, and they're still okay. They just they're self-employed or whatever. You need to have some reserves. You need to have a low debt to income ratio and no more than 10 properties on your current credit report. Now, if you did have 10 properties, you don't need to be listening to this because you know all of that. So that last bullet point is kind of redundant, but yeah, once you get to 10, you can't get those loans anymore. You have to go off the reservation and do something different. All right, our disclaimer: purchases with real estate are always subject to investment risks, including the possible loss of amounts invested. And while Real Wealth Network uses its best effort and proven protocols to screen, review, and understand the operations of each of its affiliates and their related companies, we cannot and do not guarantee the performance of investments offered through these companies. It's your responsibility to perform your own due diligence, your own analysis before retaining an affiliate. In other words, when we say affiliates, we mean the property provider in the various markets. That's just the term we use. So you need to check them out before you purchase anything. And for anybody that, when you do purchase, we require you to get an inspection and an appraisal. Absolutely crucial that you get both an inspection and an appraisal. Now, the appraisal is going to happen automatically for those of us who finance, but you definitely have to take steps proactively to order a home inspection. All right, those are the markets that we're in: New Mexico, Dallas, Houston, Huntsville, Montgomery, Birmingham, Orlando, Tampa, Jacksonville, let's see, where else? Chicago, Indianapolis, Columbus, Pittsburgh, Cincinnati, Cleveland, and that little red dot over there next to Montana would be, Missouri would be Kansas City. And then the blue star is what we're going to talk about today: Detroit, Michigan, everybody. Detroit, Michigan. So here's some things that have been talked about Detroit in the media.
The Motor City has officially gone bust.
Back to Detroit now, the biggest U.S. municipal bankruptcy in history.
As you may know, the Detroit public school system is a shambles.
Owing more than $18 billion in debt, Motor City officially filed for bankruptcy just moments ago.
It was a city in ruins. Detroit, once booming with a population of 1.8 million people, shrunk to a town of just 700,000. An auto industry that once sustained the city, needing a government bailout of $25 billion. Neighborhoods deserted and a downtown turned into a modern-day ghost town. That was the old Detroit. And this is the new. Today, business is on the rebound. And prominent Detroit-based investors like Dan Gilbert, CEO of Quicken Loans, which has more than 100 companies under its umbrella, are stepping up.
When I think of Detroit, I think of GM. I don't think of this Silicon Valley like office space that you have.
Yeah, there really is a technology center here that's growing every day. About 110 new technology companies probably in the last 3 years alone. It's nice to know that at least there's some intrigue. People like you are showing up.
That intrigue has business flocking to a once deserted downtown Detroit. 4 years ago, when Gilbert moved his company's headquarters to the abandoned city, he brought 1,300 employees into buildings that were only 20% full. Fast forward to today, downtown office buildings are 95% occupied, and construction in the now chic downtown can't keep up with demand. High-rises are transforming left and right, as was once a crime-ridden ghost town is turning into a modern-day metropolitan gem. Billions of dollars have been invested, and Wall Street is paying attention to the revival, including some of its biggest titans.
And you've had a lot of interest from people like Warren Buffett.
Yeah, they're coming in sort of daily. Actually, Warren Buffett's going to be here next week again. We just took Madonna through the other day, and we're taking a lot of people through, well-known people and not well-known people. Until you're here and can feel it and see it, you're not going to understand how exciting the opportunity is.
Basically, they're just talking about how wonderful Detroit is, how bad it was, and how much better it is now. And I've been there twice. We did a tour there, and then we had an event there last year, and it was there's definitely a lot going on. If you judge a city by how many cranes they have in the air, you're not judge a city, but judge the economy. There's a lot of cranes up, so that's always a good sign. Michigan, 10th most populous state in the nation. Population of Detroit, 700,000. Of course, that's a pretty old stat. I don't know what it is now, but can't have changed too much. 21st largest city in the U.S., and geographically, it's huge. It's pretty spread out. You can fit San Francisco, Boston, and Manhattan all inside Detroit, which is kind of interesting. All right, so one of the things that one of the, a lot of the things that we really like about Michigan is the low taxes. You can see it right there, flat 6% corporate income tax, no industrial personal property tax, personal income tax 4.25, among the lowest in the nation. That's interesting. All righty, so hey, there we go. Major employers, there they all are. And it's not all automotive based either, which is nice. Olympia Development proposing a nearly $200 million in new office retail developments downtown. That's the area that we hung out in a lot. But I had an opportunity to walk around the city for about 3 days straight, in between and breaks and at the end of the day and stuff. And it wasn't like it was all concentrated downtown. And then we went on a little tour with our affiliate there. It took us out to a bunch of different neighborhoods, and there was just a lot of stuff going on. And yet, there we are in just normal kind of middle class blue collar neighborhoods that look pretty decent as well. So let's see, Henry Ford Health System to open, and then a bunch of apartments are breaking ground at the old Tiger Stadium site. So I mean, the point is a lot's happening. Metro growth is going up, jobs are spiraling up, 0.76% annual growth. So it's like a fairly conservative rate of growth, but not at all unsustainable. Sometimes you worry when stats are a little too glowing. You're like, okay, that's great, but they can't really keep it going for too long. It's also very affordable in Michigan, cost of living lower than any other state in the Midwest. I mean, I talk to people all the time about it, and Cleveland's pretty affordable, but Detroit's even more so. Home values, red being the neighborhoods that our affiliate invests in Detroit, blue being the metro area of Detroit overall, and orange being the overall U.S. So you can see that the overall U.S. and the metro area of Detroit is pretty parallel, but then substantially lower is the neighborhoods that our affiliate invests in. Now, I just want to point out that doesn't mean that they're investing in those scary areas with $5,000 houses and just not good. a lot of times really low prices look really good on paper, but are not at all reflective of reality, because what the paper or the pro forma doesn't show you is the high turnover, the lousy caliber of tenant, and the problems with vandalism and crime the minute it goes vacant. So you kind of want to stay out of those D and F neighborhoods, and our affiliate definitely does stay out of those areas. Average price, I mean, when I've seen it, and I see all the pro formas that cross across my desk on a daily basis, and most things seem to be around between 60 and 95,000 seems to be the range. Monthly rents, same story, 942 average, and that's eerily exactly what I noticed, is that almost every single house was between 900 and like about 960. And I'm like, what if I wanted to cross the 1,000 mark? Well, they're there, they have those, but almost everything's in the 900 range. Population growth, see, that's kind of nice. Now remember, this is not Detroit specific to the city. This is the overall metro area. So where they were saying that the population of Detroit proper is around 700,000 plus, but it's 4.3 million in the overall metro area. 0.5% change between 2010 and 2018. Improving city infrastructure. They're tearing down a bunch of stuff. And if you're able to connect on Thursday, you'll have our affiliate there talking, and he'll give a lot more color commentary in terms of why are they tearing down certain houses and whatnot. I just know that when the city is so spread out, an empty house is a magnet for badness. So they want to get rid of as much of those as possible while saving a lot of them too. And how they decide what to tear down and what to save, who knows? I couldn't tell you. But they're saving some, but they're tearing down 40,000. Then they're doing a bunch of I-rail projects and bus systems, and a bunch of money allocated for police and fire. So that all good signs, all positive things for the overall Detroit metro area. Safe, low crime, working middle class neighborhoods everywhere, and that's what our affiliate goes out and finds. I mean, we drove, like, there's a town of Inkster and then Detroit, and there was all kinds of other areas that we went in various neighborhoods, cut through downtown just to get a taste of things. He even took us into a couple bad areas just to see what they don't buy and where they avoid, which I appreciated because it gave us a nice perspective. They focus on Wayne, Macomb, and Oakland County are the three counties that they focus on most of the time. So here's some sample properties. So we'll just walk through a typical property in Detroit. Now, this one and the ones that I'm going to show you today are not available, but they are examples. On Thursday, he will walk through actual properties that are available. All right, so purchase price on this one, I'm just going to talk about the finance column first. $70,000 to buy it. You put 20% down, or $14,000. You've got initial cash invested of $15,400, so that closing cost shouldn't say NA. It should say $1,400. So that brings the initial cash invested up to $15,400. Principal and interest is $300. Taxes are $83. And then everything else, you see all the costs. I mean, the property management is 10% of the monthly rent. So monthly rent, you're bringing in $850, so you're paying the property manager $85. So what this slide is doing is it's adding up all your total costs. So picture you're the happy homeowner. You own this brick building here. It's bringing in $850, and there's all your costs going out. P&I $309, taxes $83, $50 for insurance, $85 property management. That leaves you with $323 left. Multiply that by 12, and you've got $3,872. The column on the right is exactly the same, except you're just forking out $700 for closing costs, not $1,540, and so your total out of pocket $70,700. And the reason the closing costs are so much lower if you pay all cash is because you don't have a bank getting an appraisal. Their bank's not doing all kinds of other little costs that you still want to pay for an appraisal, but there's a bunch of other costs that the bank charges that you're not having to pay for. So that's why the closing costs are less on the column on the right. All said and done, $632 every month coming into your pocket, times 12 months is $75.80. All right, house number 2. Nice little red wreath on the front door there, 77.5. And I'm just going to lapse into silence here and let you absorb, because you can see all the numbers right there. Read the finance column if you'd be financing. Read the cash column if you'd be paying cash. Next. This one's cute. $105,000. Costs more, but it also rents for more. You can see the third line from the bottom, $1,100. So there's one that's over $1,000. That's kind of nice. I like that. You're at the 1% of the purchase price, $21,000 down. All the other costs there, they're just kind of ballparking insurance at $50. Obviously, that's more or less accurate. Your actual costs may vary depending on your deductible and your insurance agent, and insurances aren't all the same. And the property taxes are based on what they expect that they will be. Obviously, property taxes are somewhat of a floating thing, but the affiliate will be able to tell you how often they're reassessed. Anyway, bottom line, you got $264 positive cash flow every month on this particular property, which is fantastic, considering it's only $105,000. That's $31.68 a year. So we just kind of do the math really quickly. $31.68 a year. Well, let's make it $31.69 divided by your total out-of-pocket of $23,100 equals a 13.8% rate of return. Now, of course, that's assuming that it's rented for 12 months. It's never vacant, and that you haven't had a single penny of unforeseen costs. Most likely you will have some of those things, but still you're starting at a 13.8%, which is pretty good. All right, if anybody has any questions, now would be the time. Go ahead and type them in. All right, CapEx and vacancy, Jennifer writes. If you see, let me just kind of go back here really quickly on this. If we go back, you can see down here, I don't know if you can see my mouse, but it says, it is also recommended that buyers set aside reserves for potential vacancies and or maintenance costs, typically calculated between 3 to 6% of rents. So we leave that off the pro forma, but we pointed out very, very clearly, depending on your personal preference, you might want to add some CapEx and some vacancy between 3 and 6%. If you're really conservative, make it 10% of rents. That's what I'm talking about. So if the house rents for $1,000 a month and you want to be conservative and save $100, save $100 for when it does become vacant, and you'll have that money there. You really should have at least $4,000 to $5,000 reserves for each property, and obviously that amount will go down as if you have 10 properties, you don't have to keep $50,000 on hand, but if you have one property, you should have $5,000. I mean, once again, personal preference, but you want to have reserves. Don't cut these things to the bone, because you need to have some reserves. Anyway, 3 to 6% there. All right, so what's next? If you're interested in investing in Detroit and you want to attend the Thursday webinar, we are sending everybody who is attending this, and right now I see that there are 28 of you. We are sending you a link. Click on the link in an email, and it'll let you set up a time to connect with me tomorrow. And like I said earlier, the problem is there's not very many spaces available. So if you, please, this is important, if you're not all that hot on Detroit, you like Detroit, you're interested, but you're also interested in a bunch of other cities, then just hang on a little bit. Don't take one of those valuable slots for tomorrow. But if you do connect with us and get a strategy session, then the good news is you're able to attend all the Thursday webinars. It's not like you have to do this every week. You just need to do it once, and then you've got the keys to the Real Wealth Network castle, and you're able to attend any of the webinars. So if you're not interested in Detroit at this time but would like to learn more about other markets, just schedule something, but don't take up one of the slots tomorrow or Thursday morning, if that makes sense. If you really do want to attend Detroit on Thursday, and you click on the link in the email and you're unable to get a slot for tomorrow or Thursday morning, you can go ahead and email me at ben@realwealthnetwork.com. That's Ben, B-E-N, at realwealthnetwork.com. And I will do my very best to schedule a time. You have to be flexible, and we'll just talk for 10 or 15 minutes and find out what your story is, and if you're ready to go, and or at least in theory ready to go, and then we'll get you in. So once again, that's Ben, B-E-N, at realwealthnetwork.com. All right, just got another question that came in. Do you have lenders for these deals, and if so, do they offer financing for LLCs? Yes and no. Yes, we have lenders for these deals. No, they do not offer financing for LLCs. The only way you can get financing, if you're going to buy 123 Main Street and you're going to put it in an LLC, the only way to get a financing, a bank that will lend, is to get commercial financing. And the normal Fannie, Freddie, garden variety, conventional financing that most of us all use, they don't lend to LLCs. It's against Fannie and Freddie rules. They don't want to do it, but even if they wanted to, they couldn't. So you have to buy the property in your personal name. Now there are ways to deal with that if you still want to down the road put it in an LLC, and we have on our website asset protection attorneys and asset protection outfits that can advise you on that. I certainly really can't, but you want to just buy the property in your personal name or get commercial financing, if that makes sense. All righty, so look for your email. You'll be getting it shortly. Go ahead and click on the link, schedule a time, and like I said earlier, if you cannot schedule a time, it doesn't give you any times that work for you, then just email me and I'll see what I can do. The webinar on Thursday with Detroit is exactly 47 and a half hours from now, Thursday at 3 p.m. Eastern, 12 noon Pacific, and hope to see you there. And we'll have our Detroit affiliate talking all about the market and going into specifics. All righty. Thank you so much, everybody. My name is Ben. That's it for this week. We will see you in 2 days, or we will see you next week for our Opportunity Zone Week webinar series. It's happening all next week. All right, everybody. Thank you very much. Have a good one. Bye-bye.